Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. In this video I want to go over the 0 DTE guide for SPY that I've been currently using. In this strategy we're going to be selling put credit spreads and or call credit spreads. If you do both, it's an iron condor. On the SPY, you typically do it within 10 to 15 minutes of the market open, and then we let it go for just that day. There's a lot of gamma risk. There's a bit of risk in the strategy, so we definitely want to do stop losses on it. And I typically do stop losses at 3x the premium received, and then just let it decay out. Go pretty low deltas on these as well, so we have a pretty high probability of success. I'm also doing alerts on this on thetatraders.com. You can see a link in the description down below. If this might be something interesting to you, you get a free 2-week trial. You can test it out and see if this might be for you or not. So anyway, let's go over the strategy and get into it. So what's interesting about this strategy is you could do it 3 times a week. The SPY trades on every Monday, Wednesday, and Friday, pretty much every week. And you could actually earn some income between 1 to 2% is what I found so far on a relatively safe strategy. We'll look at the percentages of success that you'll need in order to be a positive expectancy and actually make a profit on this position. It ends up being about 75% or so with your stop losses. And currently we're at about an 88% success rate, so good returns so far. And let's go over some of the strike prices and what I look for picking these premiums out. Okay, so if we look at the daily chart right now, it's 11/12, November 12th, and we're at 467.07, doing this video at 10:24, so a little later than normal. If you go to the trade tab here, we're going to be looking for possible trades that are about a 0.05 delta at this point. So 467 and so, market has turned upward where it started a little bit lower. If we go to say on the put side, about 463, pays 0.05, not a lot, but let's do a 5 with strike to 458, and you get $4, so a little less than 1%. If you go on the call side, let's say at 471, not going to get much either, about 0.03, and then 476 for the iron condor. You're looking at a $7 gain minus commissions, looking at about five total dollars with 500 at risk right now, but we're going to be doing stop losses on it as well. So we're going to be considering this trade because it's a pretty low delta. The stock would have to go close to the 471 call side or the 463 put side in order for this to get stopped out. And if we get, say, a $7 gain on it, you can do a stop loss at 3x the premium or about $21. And then either you get successful on the trade or you don't. Okay, so here's the current trades that I made for the position. I started it on October 8th. We've been doing it pretty much every Monday, Wednesday, or Friday since then. The put iron condor, put credit spread or call credit spread. Looking at the stock price at the time, looking at the strikes, and I'm trying to go around 0.05 delta. Sometimes you might go closer to like 0.08, 0.09 or so, but I never actually went over 0.1 delta in the strategy. I write the VIX to see what possible premiums would be. These are all 5 with strikes. So premiums are these numbers divided by 500 will get you your return for the amount of money you have to put up. And this is the outcome, win loss or stop loss. Again, I'm doing stop losses at 3x premium. So for this particular trade that we made $18 premium, we got stopped out of it. And then we had a $45 loss minus 18 received. So if you do a 3x stop loss, you're actually going to be only 2x in the total loss since you received that $18 premium. And then I write the percent gain with the commissions. As you can see, these gains for 1% are pretty high, 2, 3%. Sometimes might be a little lower, like a Fed day was 0.5%, 1-2%. Win-loss ratio, we're actually 8 for 8 when we started out. Had a few little losses here and there, but now we're 12 for 14 with an 86% win rate. Total profit, I was looking at how much we started with $500, just one contract. We would add to it if it won. We would go down like right here if it loses. And then the total gain is 577.45. So we made $77.45 in about a month. It's a very good return so far for 1 month. And again, I'm just testing it out on a small one contract to see if the strategy would make sense in the long term or not. And so here shows the percentage gains that you could get per position depending on your win rate. So we're looking at profit of say $10. You're going to stop loss 3x that at $30. I didn't count commissions in the initial profit, but I do count them in the stop loss because you do have to pay an additional commission to get rid of the contract. And we're going to look at about 150 trading days in a year. So if you're at a 60% win rate, you're going to be gaining 150 times 60%. That's 90 days and gain $10. You'll have a $900 gain, but you do get stopped out 40% of the time, which would end up being 60 days times 22.4 with the commissions included. You'll be down 1344, and then you're at a loss of negative 88%. So that's not good. 65%, you're still at negative 40. 70%, you do show a positive expectancy at $10, and 8.4% a year, not anything to brag home about. But if you can get up to 75%, you're at a 57% annual return, which is a very good return. And that's with $10 in premium, $15 premium. You have 23% for 70, 94% for 75. If we go up to $20 in premium, you could get 38% in the 70, 132 in the 75. And then I just looked at some of the higher percent rates. When you get to 80, 85, 90, you get to really high percentages. So I think it's probable to get between the 75 to 80% probabilities on this, as long as you stay really low deltas and make sure you're staying on your stop losses. All right, so this is a new strategy that I am doing, and we are launching a new website with thetatraders.com. If you're interested in getting these alerts 3 times a week, as well as cash secured puts, give 2 recommendations each day, along with credit spreads and other high probability trades, join at thetatraders.com for a free 14-day trial. If you have any questions, leave a comment down below. I'll read and respond to all comments. Be good out there, make your money, and have a good one.